Hey, welcome in everybody. I'm Chris Temple, editor and publisher of the National Investor, and was part recently, as you all know or should know, shame on you if you don't, of our Strategic Investment Insights Conference recently that we had the first weekend in May up in the Chicagoland area. And at that conference, importantly, we talked about a variety of subjects. Of course, first and foremost on everybody's mind is what I've called a new energy crisis. Others look at it in terms of the old energy economy. If they favor that, they look at it in terms of the evolving, but not that quickly yet, green economy of the future and electrification of everything and so forth. And among the subjects we talked about, we didn't spend a great deal of time on copper specifically. And so I reached out to my old friend Gianni Kovacevic a few days ago, and Gianni has graciously appeared to join us here today to give all of our audiences an updated snapshot of the copper market fundamentals, recent developments, and so forth. And Gianni is here joining us from Zagreb, Croatia. So thank you for that, Gianni. Welcome.
Thank you. I'm actually on the island of Hvar, but not far from Zagreb.
Oh, okay. That's where you are right now. Gotcha. Well, look, I'm happy that you're here, folks. Gianni and I have kept in touch sporadically for quite a number of years. We compare notes every now and then, and it's really timely to have him here because for a lot of you that follow the markets and you followed our talk from Strategic Investment Insights, you follow me at the National Investor. And of course, we put our quick contact information up on the screen as I'm introducing this, so you know how to get a hold of both of us. And finally, Gianni's website is kovacevic.com. Gianni is well-traveled, one of the smartest guys I know in this area. And once upon a time, you authored a bestseller. The title is My Electrician Drives a Porsche. Is that right?
Exactly. All about electricity, nothing to do with fast cars.
Right. There you go. So you're going to learn, you're going to get a lot of insights from him in just a second. But Gianni, again, is a guy that is our go-to guy for the copper market. The copper price in the recent past has collapsed. Took a lot of people by surprise. I'm sure a lot of it was forced selling when people, are having to get liquid, as we've seen so far in this bear market. You don't sell what you want to, you sell what you can sometimes. You add to that the fact that unlike when he was telling us all along as he was stoking 4-decade high inflation, that it was all a mirage and all transitory. Now Fed Chairman Powell is at least being relatively more honest and telling us, preparing us for, yep, I'm probably going to cause a recession with fighting inflation, but fighting inflation is job one. So, we need to handicap all of these different asset classes, even ones that have a great future like copper. Do we start nibbling now? Do we pile in now? Do we ignore the short-term noise and look down the road to when policymakers get way more serious and better at this or not? So, Gianni, I'm going to turn it over to you. You've prepared a great presentation for our group that I peeked through earlier before we got on here. And so give us your take on the copper market. And I think you're going to come to the conclusion the story has not only not changed, but it's probably getting better. But we'll let you have the floor now.
Thanks a lot, Chris. And with COVID and my transition out of the management of Copper Bank Faraday, I've been, just watching the market. And I look at a few other metrics I think maybe hopefully people don't look at every day. And the idea is here to have some information or data points that you're not going to get elsewhere. So if I put together, probably 95% of the information people will be familiar with or see it every day. But when it's put together in a thread A to Z in a different way, hopefully people get some benefit out of that. So effectively, this is a graphic I was using recently, sort of 3-4 years ago, when I was pretty firm in the belief that copper is going to play an increasingly important role in commodities and in global energy. And this has not changed. This is something I'm going to fortify with data points. But by the time we get to the middle of this decade and closer to the end of the decade, I think copper is going to continue to be one of the great themes. And it's really about all the enablers of electrification. This is not something this theme has not went away and it's not changing. And you could see here that even before this real pivot takes place where more and more things become electrified, for decades, 75% of the copper that's produced goes into something to create, transfer, or utilize electrical energy. And the amplitude of that electrification in all forms is going to double in about the next 20 years. Now you can argue recession, inflation, the Ukraine-Russia war, but these are things of the margin. Overall, humanity moves forward, and I believe it's only going to be amplified for some of the points we're going to talk about today. This is something everyone's well aware of. The copper price was very sleepy. COVID occurred, and then all of a sudden the copper price went to an all-time high, and it's been bouncing around that $4.50 level. But when you look at the loss of value of, namely the US dollar, on an inflation-adjusted high, when copper back in 2011 was $4.50 a pound for the first time, that is not the same $4.50 we have today. So how much loss of value is there in the US dollar, where all commodities, of course, are priced in US dollar? You can use your own imagination, but if we lost 50% of its buying power, maybe more with all the dollars that have been printed. So at an inflation-adjusted level, copper is nowhere near the all-time high. And once again, we've seen it roll over here just in the past sort of 6 weeks. And this is why, this graphic is why are we going to discuss this theme today. And I think the next few slides should give some color on that. This is something that I circulated before the copper price went higher. This is from 2019. And I'm looking at 20 years of the copper price superimposed with global inventory levels. So it's logical, very little bit of inventory, the copper price went much higher, becomes more of a premium on it. And the thing I really want to highlight here is that even though there was a high copper price for most of the last 20 years, meaning it never went back to 70 cents like it did before in past cycles, we were, as investors, we're almost always climbing a wall of worry. So what does that mean? There was very little ebullience. So if you look at the color-coded squares, when the copper price went to a new all-time high or it had this euphoric peak, that was always followed by nervous times. And they were pronounced, years. And the biggest one was of course, 2011 to 2016, 2017. We are in something very similar right now. But if you conglomerate 20 years of the mood of the investor, there was maybe about 4 years of euphoria and 16 years of negative sentiment or climbing a wall of worry. It rolled over and it never kept going higher. Commodities are never going to go up in a straight line because nobody in the world, the end user, people that make cables and motors and transformers, they have no interest in high copper prices. So when the copper price does go higher, it's almost like a subliminal collusion. They work with the traders and the speculators. Nobody wants these prices to stay high. You have to literally run out of copper, and then the speculator goes and pushes it higher, and then the end user ends up having to trip over themselves. So we are once again climbing a wall of worry. But this is going to be one of those interim mini walls of worry because inventory levels are low. We are moving towards more things that are going to be created and transferred and utilized about electrical energy. We are going to be consuming more copper, irrespective of all the negative headwinds that are there, and they're all on the front page of the newspaper. You read every single day. This wall of worry is not going to be years. I will submit to people that it's going to be months because inventory levels are low. And if you're in the business of making cables, motors, transformers, business is good and it's going to continue to be good, irrespective of if there's a recession at our doorstep. This is not, in my opinion, going to be a depression. This is not going to last years. And the stimulation that comes when we talk about global energy and where we're moving and how we're pivoting and where countries, the big economies around the world, this is all to support the electrification or the greening of their economies. This has not changed. So this is something that Andy Holm, who writes for Reuters, many people that follow Twitter would know Andy. He's very familiar with base metals. And logically, the speculator, they're the ones that move the needle. And right now we have this symbiotic relationship. No one's buying, or if we're in the business of making cables and transformers and things like that, we are going hand to mouth. We have no interest in having long price discovery because the price is going lower every single day. And the speculators, what is the trade right now? To be long copper or to be short copper? Well, the data is very conclusive. It's a no bid market. It's a hand to mouth for those people in the business. And of course, they're obliging them by just piling on this trade. Can the price of copper go lower? Sure, it'll go to whatever level it wants to go to, but we are not going into a vacuum where the world is not going to consume copper. But when this flips, when this holy alliance breaks down and the speculators decide to go long, that's a mini mania, and that's where fortunes are made, and that's where I've made a lot of money. But you have to own junior shares, because if you don't own them, when the bottom comes in, you get kicked out of the trade. And no one's, people just don't want to buy something they followed that doubles in 3 days, a junior I'm talking about. So unfortunately, you have to sort of go through these growing pains. Don't need to talk about this. You know about all these things, and everyone will sit there and pontificate on why the copper price is going to hell and it's over for now and forget about it for the next few years. This is not the trade. It's still an energy trade. And if you look at the countries that are impacted by high energy prices, you think you're having a tough time in the United States paying $5 a gallon? Try going to Germany, where the price is 2.5 times higher. It hurts. It costs real money. Or if you look at the economies that are impacted by high oil prices. Now, this is a graphic that was used when oil prices were low. So who benefits from cheap energy prices? Well, the biggest energy users: India, Japan, China. But now that energy prices are high, these are the people that are impacted the most. So what do you think China doesn't have big petroleum reserves, nor does India, nor does Japan. Do you think the country of Japan is saying, well, let's get ready to pay high oil prices for the next 20 years. This is going to be great. Or are they going to accelerate yet quicker their transition, not in 1 year or not in 6 months, but these things happen over 5 and 10 years. It's millimetrical progress, but a progress that occurs. I know it might sound counterintuitive or perverse, but high oil prices are extremely bullish for copper and renewable energy, because these economies, the biggest industrial economies around the world, exacerbated by now this transfer of energy, which I guess if they're serious, they're not getting their energy from Russia, but getting it elsewhere. So that's easy. Russia will just sell their energy to India and Pakistan and China, but we in the West and North America, but all countries, including the ones that are going to buy energy from Russia, make no mistake of it, their plan is going to become more acute, more aggressive, and that is going to use copper sooner than you might think, because business is going to be good. I reiterate the thought: if you make cables, transformers, motors, and they're going to be buying copper, and there's going to be a bid for copper, even in what could be short-term recessionary sort of situation. This is Royal Dutch Shell, and they came up with this concept about 5 years ago that many people don't realize this, but when you're talking about final energy usage globally, it's still fossil fuels. We all know that. Energy has grown by about 2% per year, but electrification is only about 19-20%. They were saying it won't get to 50% for the next 30 years or so. That's moved up now. We're probably going to be around the year 2040. You're going to see about half of the things that consume energy, the final energy usage is actually going to be electrification. So this is real, and this is something that's going to be a buoy for the copper industry, really not just for what I'm talking about, but it's going to be a good industry for decades to come. And you're going to be crying in your beer when copper is $4 a pound. This is one such time. I was actually joking about this before when 3-4 years ago when copper was $2. And what are people doing? Copper's $3.80 a pound. They're crying in their beer, and shares are being punished as if copper was $2 a pound again. Funny how that is. So look at the sentiment and the psychology of an investor, of a speculator, and on the TSX.V. So on April 21st, the velocity of money, I noticed that for 3 straight days, volumes went to nothing. And I specifically said, what is the market telling us? Or this is now psychology. When you talk to good investors, they say, if you could go back in time, what would you become? As an investor, they'd say, I want to really understand psychology, because that is what moves markets. I raised over $1 million in cash on these 2-3 days. Small part of the portfolio, but still, it was important because the market was telling me it was rolling over. There was no buyers. You were in a no bid atmosphere. And when I look at the TSX.V 1 year, you could see how low the volumes have been. These are unprecedented low volumes or velocity of money. So you've been in a situation where there was a buyer strike, and if you wanted to get out of a stock, you really moved the price down. And we saw this on the overall average of the TSX Venture. Just to really fortify this point, look at the 3-year TSX Venture, and the volumes were, you see that 250 peak. That also, by the way, that when we have big volume spikes, it usually tells you the market's going to roll over. It's been very consistent for 20 years. But we are unprecedented. Look at for 3 years. So if you look at that measure on the bottom, the volume scale, 225, and we were about 120, 150, went to 80, 70. It went to 40 overnight. It got to a low of 15. I mean, that's unbelievable. It was like 5% of the euphoric high volume velocity of money. And if we look at the 15-year, it's unprecedented by a power of magnitude. It's like 50% lower than all other periods of time, with 60% lower. This really is a situation where there's no buyers. And this is my opinion. Why? Because gold is still $1,800 an ounce. Copper is $3.80, $4 a pound. It didn't go to $2 a pound, or gold didn't go to $1,000 an ounce. Oil isn't at $20 a barrel. The commodity prices are doing relatively okay. So what that tells me is people are just not selling their shares. They're not buying, absolutely not. But it's right now, it's like the music is off and people don't know where we're going to go. But it's hard to sell a share that you followed for many years, because when should you re-enter a position, or should you be selling a share that's down 80%? People don't want to be the sucker. They don't want to be the guy that's, and if it's not the bottom, this could last a year, it could last 18 months. That's not the point. On any specific share that was trading at $1 and it goes to 18 cents, I mean, it's not going to zero probably if it's a company of merit and has the ability to raise cash and what have you. I mean, what's the low on that stock going to be? Somewhere within pennies of the low. So people just don't want to sell that share anymore. And we could look at a report card on two very familiar names that people made a lot of money with, Capstone Mining. And sure enough, on around middle of April, they all rolled over just like you saw. And how much different is Capstone now? Does Capstone deserve to be $3.30 a share, like when copper was $3 a pound? I don't know. Or Copper Mountain Mining, does it deserve to be $1.70 a share? Is it going to $1 a share? Maybe. What I'm trying to share with you is that you need to follow this. You need to follow the velocity of money. And certainly there does come a time where, even though this could last a much longer period of time, I'm being optimistic, but it could certainly last 6 months, a year, maybe 2 years. But every stock has a DNA, and there comes a time where you need to say, okay, now I'm dollar cost averaging here. I'm going to oblige these guys. I want to be like Ben Graham. I buy from pessimists and I will later sell to optimists. This is extreme fear, extreme pessimism in the market. And eventually, if you follow this on a longer term basis, you become an optimist, because you know the DNA of whatever stock, and there comes a time where you want to buy these things. You just have to probably end up owning it a little longer. And so this is intact. I believe copper will be a story that's going to have forever climbing a wall of worry, because nobody wants to pay high copper prices. When the speculators go on the long side and the fabricators are tripping over themselves to get the supply, but it really is acute when you have a mania of people buying their products, people actually buying cable, motors manufacturers, and things like that. So a little tricky one now when people say there's a recession coming, but it's going to be stimulated by all these people with high energy prices, putting in really hundreds of billions of dollars into these schemes for renewable energy projects. And everyone should know by now, after all the stories you've heard over the years, a wind power park takes 400 to 500% more copper per megawatt. Offshore wind, 10 times more copper. Solar projects, 3-4x more. Electric cars, 4 times more copper. Very copper intensive, and that's a well understood trade. So the demand of copper is going to continue to climb. It'll be a positive CAGR growth rate. It was about 3% since 1900. My philosophy is that copper could grow by about 4 or 5%, sort of really when we get into the little mania bull phases over the next 5, 10, and 15 years. And that's when all the money is made. So it will come. It's something that, but you need to be prepared, and you need to follow this stuff like a Harlequin romance. a bit of an older graphic, but it's still relevant. I just pulled it because I think it shows you these are the 14, 15 largest copper companies. And it just shows you the grade. There's been no inventing of the wheel. It's not like oil and gas. We don't have any way to extract more copper or find more copper at the margin. There might be some things, new technologies, but it's going to be deeper. It's going to be at higher elevation, without water, with all the political instability that you read about every day, and grades falling. So if you're a miner in Chile and you're our operation, we're doing in those 400-ton trucks you see that are the size of a house, and we're mining 25 million tons a year. Chris, when grade goes from 0.6 to 0.4, you have to mine 35, 40 million tons.
Right.
Same metal yield. You don't get any more copper. And grades globally at almost all operations are falling. And they will, in the next 5 years, they will fall yet again. So a lot of this new money or new investment or innovation that's going to come is going to be offset by this falling grade. So there's no way, maybe we get efficiencies of 5, 10% by different technologies, but it's not like oil and gas. It's never going to be like oil and gas. And we already recover over 90% of the copper out of rock. So that efficiency is pretty efficient. We're talking 1 or 2% incremental sort of demand. So there's my favorite graphic. And people should stick this in their mind. And we're closer to the bottom than we are the top. I will say that, even though it can be boring and painful, and fear is an emotion that lasts a very long time, especially for investors, but greed happens fast. And it's a psychology of the market. It'll just, because people, money, will decide that things are cheap. And when a stock like Capstone or Copper Mountain get to the stupid level, there are people that want to buy those shares. And we'll leave it there. I leave you my favorite stock, Faraday Copper, my former copper bank. I think it's an interesting speculation. Very long on this one. And that's the company I think that people should take a look at as a junior. Raised $20 million about 6 weeks ago, above the market, no warrant, and they didn't even pay fees. So strong guys, they're all big company guys, and they're going to be delivering a ton of news, and they do not need high copper prices. They need 350 copper, 340 copper for this to be a very happy ending in Arizona. People could do their work on their own time, but I think maybe we focus on any questions or any other. I don't know how you feel about that, Chris. You follow markets very carefully, but what do you think?
Well, I'll tell you, besides Graham's quote there, of course, a lot of people are familiar with a quote of the late Sir John Templeton when he said, "You buy when there's blood in the streets." And, for weeks, my co-host Mickey Fulp and I on our weekly Kitco program have been talking about the utter collapse, which you alluded to, in volumes on the venture exchange. And it's like everybody is AWOL from this. One of my favorite cartoons that my cartoonist did for me a while ago, and I used to talk about this, Johnny, just in the context of the gold space, because gold for a year and a half is a great place to be, and then for 5 years it stinks, and especially for people that get emotional and chase juniors at the top and then ride them all the way down. People chronically have lost money in the last 20 years in the gold space, even though the gold price is up several times in value. But I always would make the characterization that when the light bulb goes off over the heads, especially of generalist investors, when you start hearing about themes every day on CNBC, and it's not just the gold bugs that are buying or they've already bought, but it's everybody else that starts coming in because they can get their head around a narrative. It's like a 300-pound man jumping into a kiddie-sized wading pool. It'll be a huge impact. I mean, we'll see a lot of these things go parabolic. Now, we may need, and I agree with you, and I've been saying this, that we're going to go through a bit more pain first. We don't know if the Fed pulls out one too many sticks from its game of monetary Jenga and everything goes really into the crapper for a while before we reinflate everything on the other side, which will come, or what's going to happen. But I'm beginning to believe that analogy of the 300-pound man, or more so an elephant jumping into a kiddie-sized wading pool, is what we're going to see with a lot of these good resource juniors, because you follow Jeff Curry, I'm sure, don't you, Johnny?
Yes.
I mean, I've referred to him many times in my own commentaries about talking about commodities, and something that's going on today that is more acute, I think, than ever. And that is that, and you correctly, in my view, dismissed fears of recession, because the reason why we have stagflation right now is that even if we do go into recession, we may be teetering on the edge now, depending on whose numbers you want to listen to. We're still going to have high prices, because the thing today, whether it's copper, whether it's uranium, whether it's oil and gas, no matter what you're talking about, pretty much, is that there's been so many years of underinvestment. And as you correctly pointed out with the copper industry, grades are getting lower, costs are getting higher to extract them, and so forth. We're going to, for as long as we live, unless you believe the world's going to go into an economic stone age kind of depression, there's going to be upward pressure on all of these prices. And I think especially when we get to the place where the Fed is going to have to abort its so-called tightening regimen right now, because it'll have to go the other direction, that's when we're really going to see that multi-year secular bear market and all of these things. Because I think on the other end, and I'm curious to hear your take in Europe, but here in the US, all of the promises of the last several years for major infrastructure spending, all that kind of stuff, it's largely unfulfilled. And it's going to become an economic and banking imperative that they finally get their act together on this stuff. I mean, with all of the nonsense going on in Europe, there's war, there's shortages. I know the European Central Bank set up an infrastructure bank a while back. Has it done anything yet?
Now, a lot of lip service there, which is yet to come. So I drive an electric vehicle. I drove one in North America, all over the States. I've driven up and down, and I look at the infrastructure. That there's a little company based out of Northern California, named after a famous Serbo-Croatian scientist. And they were ahead of the curve. I mean, they were able to build a lot of infrastructure, and I successfully navigated with relative ease and relative comfort from Boston to Florida, Florida to California, back up to Washington State, no problem. And you can do the same in Europe. When you're talking about the other guys, they'll showcase, oh, we have a fast charger, but it's one singular fast charger. And when you go on vacation, what happens when there's people, you're not going to wait in line. They could have built 8 fast chargers. They built one just to show, oh, we have one. That was lip service, but that is coming. That's actually what's going to be built now in real time, because the offering is there. And we know it can happen quickly. Those guys out of Northern California, they did it very fast. So if they actually go and do it, and this is another, just a pervasive user of copper, all of this infrastructure that's going to get fortified. And there, a whole nother talk. We have to do probably a follow-up on this, but there's a lot of negative people on the electric vehicle. Fine, I don't care. They can be negative. There's a lot of misinformation. So one, for example, is that we don't have enough electricity to charge all the cars. Well, in Europe, it's going to be very simple, because if you want to charge your car at night, it's going to be cheap when there's less people using electricity. If you want to do it at 5 o'clock or 4 o'clock, it's expensive. Okay, if you want to pay a lot to charge your car, that's your. But I'm guessing common sense tells me most people are going to do it when they're sleeping. So they'll take the lower tariff electricity, and in that context, there is enough, on the grid, but you just have to use a bit of common sense there. But there's a lot of those different myths that need to be debunked. But ultimately, the idea is to have more and more renewable energy based on the endowment you have in the neighborhood you live in. Sometimes it is going to be natural gas as the peaker power, because it's instantaneous and far better than coal, in my opinion. That's a different story for a different time. We don't care. Even if, as I tell people, I don't care if the windmill works for 1 hour of one day in a year. They've used the copper. It's installed. It sits there for 10 years. I don't care. It's a copper investor. They just install it. I'm not going to lose any sleep over that.
No. I'll tell you, you've given us a lot to ponder. Great lap through the fundamentals of the copper market, which despite the spot price of copper recently, there is no reason for hand wringing. There's every reason that smart investors right now should be taking their positions for what's coming down the line, because we know with all of these metals and minerals, critical metals, right down the line. And I've talked about this with uranium, with copper, even with conventional energy, which is not in as good a supply situation going forward as some people want to think. We're going to have a boom in these commodities. And I think when things are really going to take off is when, again, policymakers who, at least here in North America, and especially in the US, have screwed up almost everything they've touched so far, there's going to be either a greater crisis of high prices for fossil fuels. We're not moving fast enough to build the supply chains for EVs. All of these things are going to coalesce, and at some point we're going to have a lot more serious effort, and that's, you don't want to be late in taking your positions for that, folks. So Gianni, I'm grateful that you took some time with us. You're a great guy. You nobody better than him in these markets, folks. So again, we'll put his website back up on the screen. Make sure you visit him, follow him on the internet.
Twitter the best. Twitter's the best. It's probably the most
yeah.
As interesting information comes out, like everyone knows, you're sharing it there, and I think it's an interesting platform. Yeah.
Well, I do that all the time. I have people that get mad at me because I don't send out a formal email to my subscribers 8 times a day when there's something important. You can't do that, but it takes you just a second to put something out on Twitter. I love the platform. I have since they started it. We can, put aside the political discussions that have embroiled it from time to time, but it is great. I mean, we can trade that information instantaneously. So we did add your Twitter handle too on
Great.
here.
Thank you. That's great.
Yeah, and thank you again, Gianni. We'll look forward to future discussions. We need to do more of this.
Yeah, we'll be in touch. Have a great day and have a great Independence Day weekend.
Thanks.